Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is Jeanette with Trade Thirsty. Give me a shout out in the chat box. Let me know that you're here and you can hear me and you can see a PowerPoint on the screen. Glad y'all like the music. Good morning, Rob. Good morning, Sam. Good morning, Linda. All right. Looks like the gang's all here. So let's go. All right. So we say August is on fire because I don't know where you live in the country, but I'm in Mobile, Alabama, and it's been above 100, it feels like, since January. I'm just kidding. Not January, but goodness gracious, it's been hot here. And I'm ready for some fall weather. But let's talk about the market. We say that August is on fire because the market's on fire. And I've got a lineup today of A-listers. I've got 5 guys in the house that are going to come and spend an hour apiece with us. And here's your lineup for today. And we'll repeat this at the top of every hour for you, so you don't have to worry about writing this down right now. We're going to kick it off with Primo here in a couple of minutes, Stephen Primo, then Serge Berger, Troy Noonan, Jeff Tompkins, and my crazy Aussie Johnny Seville will take us home at the end of the day. I'm Jeanette Sims. I'm the founder of Trade Thirsty, and we put these events together. We call it By Traders for Traders to help you get some of the best of what's going on in the trading and investing world right now. Let's do a little bit of housekeeping before we give the mic to Primo. All the presentations are being recorded. We're also streaming on YouTube. We don't guarantee the recordings because, you know, sometimes things happen. If you've got questions, you can type them in the question panel where you are right now. We're going to be doing quizzes. We're going to give away cash. We're going to give away a bunch of swag. I've got t-shirts, hats. I've got all kinds of fun stuff in here that we're going to be sharing with those of you who stick with us all day. We recommend that you put your webinar in full screen mode so that you can see the charts and all the information that they share. Here we go. We're going to be here for the next 5 hours, and y'all know the bottom line rule for us is be nice. Be nice to the guests. Please, please, please. They're spending their time with you today. They're here at no charge, hanging out for free, giving you what they believe is going to happen in the stock market. All right, so let's put a J in the chat box. Let me know that you're here and you're ready to do the quiz. We're going to give away $50 cash to kick this thing off. All right, they're popping in now. You gotta have some fast fingers for this one. First person to answer the question in the chat box correctly wins $50 from all of us here at Trade Thirsty. And here we go. Question number 1. What was the name of the crime boss who was the head of the feared Chicago outfit? I let my son, he's 25, I let him create our quiz questions today. I was pretty interested to hear what he came up with. Yes, Arnold, you are the winner. Al Capone. It is Al Capone. And there we go. So, Arnold, put your email for me in the chat box, and we'll send you some cash. All right, so like I said, our first speaker today is my good friend Stephen Primo from Proprietary Strategies. He's going to be talking about volatility. I spent a lot of time reading up on Stephen's strategy so that I can prepare for today. And what he's got to say is going to really kind of rock your world and what you can be doing, just small things you can be doing in your trading strategy and in your approach to the market every day. So I'm excited to have him here back as our guest. Stephen, I'm going to go ahead and give you the mic. You'll give me just a second. Ta-da. It's always the tricky part. All right, I'm making you the presenter. If you'll give me a mic test.
Hi, can you hear me, Jeanette, all right? I'm right here, testing 1, 2.
All right, I am not personally getting any sound right now, but let's see if the attendees are getting sound. We'll go ahead and rock out, and I'll figure out what's going on with mine. And
I hope you can all hear me. I guess Jeanette is asking to go to
here. I'm going to stop talking. I'll figure out my sound. Stephen, you have 1 hour.
Okay, thank you, Jeanette. I hope everyone can hear me. As I was saying, if you can't, I guess contact Jeanette or Trade Thirsty. But I think we should be okay. I see that my mic is working all right. So I want to welcome you and thank you being the first one today. I know you have a lot of great speakers, and you're going to get really some great information today. Now, what I'm going to personally do is talk to you about what I feel is the perfect trading strategy for volatile markets. And it fits in really nicely with what we're experiencing. And you're actually going to get the very first entry rules to this method. You can start using this as early as Monday. Now, let me show you an example here. Let's look at this older chart, 9DXX, all right? This is the way this usually works, and this is why most traders have difficulty with volatility. They'll see a chart like this where it's headed nicely upwards, and let's say you're lucky enough to be long, and then all of a sudden you'll go to a chat room or some guy on TV will say, this is overbought, it's time to get out. So if you're long the stock, you say to yourself, yeah, I've got a nice little profit, maybe I'll sell. Well, with what I'm going to be teaching you today, you would have known not to sell. And in all actuality, you actually would have been buying on this bar, because this strategy, which you'll be learning, actually identified that there was more room to the upside, and you could have potentially captured another 62 points in the move. So this is what we're going to be talking about today, the perfect trading strategy for volatile markets. Now, everything you're seeing today is displayed coming from our platform, the PTS Primo Charting platform. It really makes trading easy. We made everything one click away. What I'll be teaching you today is easy access on the PTS Primo Charting platform. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. About 15 years ago, I teamed up with Proprietary Strategies with one goal in mind, and that was simply to educate traders, because we feel this is what's mainly missing for most traders' trading plan. I've been trading now for roughly 46 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor of the exchange for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. Specialist isn't any more special than anyone else, but if you ever Google those pictures of those guys on the trading floor making those weird hand signals and yelling back and forth to each other, a specialist is someone who made markets in roughly about 50 or 60 stocks. So in the old days, if you wanted to buy a stock or sell a stock, your floor trader would take your order over the phone, walk up to the trader who specialized in making a market, and then trade the stock with him. Okay, so I traded through the crash of 1987 and the bull market that followed. I made markets in IBM, US Air, Waste Management. So in my 46 years of trading, I have seen and traded just about every market environment, every system you can think of. So I know what works in terms of consistency, and I know what doesn't. So that's the service we provide at Specialist Trading. We are simply an educational company where we provide all these tips, techniques, and strategies so that you can make your own trading decisions. And you'll see that attention to detail and to education in today's class. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so, if you haven't seen our webinars before, there's lots of great free education to get on a daily basis. So please feel free to follow us on Twitter. There's our handle right there. Every day I post between 5 or 6 different snapshots of signals that our methods have generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, we're a little bit different from other webinars and other presenters in that we are strictly an educational company. Our sole purpose is simply to educate you, because our philosophy is a good mentor does not trade for you. He teaches you how to trade. So that's my goal, not to force feed you signals or not to tell you what I think the market's going to do, but to teach you how to spot these things on your own, to teach you how to trade with the specialist edge. This is the same way I was taught some 46 years ago by my mentors on the floor, and what I really truly believe has sustained me now for over 46 years, and I hope will do the same for you. Okay, so I believe, as Jeanette has said, this is going to be recorded. So what I want to do here is first say, if you have any questions, please wait till the end. We have a lot of good presenters following me. I don't want to have this drag on too long, and if we ask questions for every slide, we'll be here far too long. So if you have a question, write it down and try to remember it. I promise I will get to it at the very end, okay? And if something doesn't make sense, remember this is being recorded. You can watch this over and over again at your own leisure, all right? All right, with that stated, let's begin. And what we're going to be talking about today is what we call strategy 3A. All right, it's a great strategy for volatile markets. You're going to learn the entry rules to this today, usually reserved for our students and members. You're going to get them free. Let me give you some of the highlights of this particular method. It's a continuation method. So what does that mean? Well, where some strategies look to buy at the low or sell at the high, what this does is it looks for a trend already established, and it identifies whether there's more room in that trend to follow. And then it jumps in continuation of that trend, okay? Now, the way it does this is by applying a unique Bollinger Band setting. Now, many of you are familiar with Bollinger Bands. We alter the settings to this a little bit. We usually reserve those for people who have purchased this strategy, but I'm going to share with you what that unique Bollinger Band setting is today. Now, the purpose of this strategy is designed to trade quick, powerful trends. And the beauty of it is you can apply it to any market, any time frame, and any direction. So it's not just one of these things that it only works on a 15-minute chart of Apple, or it only works on the currency pairs. No, if you trade multiple markets, you can use the same exact rules to all these different markets, all right? But with all of our methods, because you're going to be learning the entry rules today, please learn the strategy, practice them, watch the video, and then paper trade first. Why? Because I can almost guarantee you that if you jump in too quickly, you'll lose money. Many times we've sold our strategy, this complete strategy, to all of our students around the world, and they trade it and they start to lose money and they say, Steve, what is wrong with this strategy? It's not working. And then they show me their work and what they've done, and they're almost always implementing the rules incorrectly because they didn't study the method, they didn't paper trade first. So please practice first before you jump in. Our edge here with this particular method and with all of our methods of specialist trading is consistency. Consistency means that there will be losses from time to time. That's okay, but a consistent method is one that's able to recoup those losses, oftentimes on the very next setup. So that's what this method and with all of our methods are. They're very extremely consistent. Okay, so let's talk about Bollinger Bands. I know many of you are probably familiar, but for those of you who aren't familiar with Bollinger Bands, they're a very popular and very good indicator. Now what it is you see three bands or three lines in this indicator. The middle one is just a moving average. It's a simple moving average set at 20 periods. So that's what the middle band is. Then you have a band on top of that and a band below it. This is called the band deviation. In other words, the distance they are from the middle moving average line. Now that's usually set to +2 for the top band and -2 for the lower band. Now don't ask me to go into the inner workings of the Bollinger Band. It's just that's the setting you'll find excuse me, on most default Bollinger Band settings, okay? So if you look at a chart and you apply this with the standard settings, you'll see it looks something like this on this generic chart. Okay? You have the middle red line. This is just a 20-period simple moving average. Here's the top Bollinger Band set at a standard deviation of 2. And here's the bottom set at a standard deviation of -2. All right, we're going to alter this for the sake of this particular method. We're going to keep the moving average the same. Okay, it's going to be set at 20, but what we're going to be doing is changing and altering the upper and lower band deviation. We're going down to a fraction. Instead of +2 and -2, we're going to +0.382 and -0.382, okay? Now you all should have the ability, whatever platform you're using, to be able to go into the edit box and change it down to 0.382 or -0.382. If you can't, then contact your tech support, whatever platform you're using. They should be able to set that up for you, okay? This is the beauty of the PTS Primo charting platform. Everything is pre-formatted. You don't have to change anything. With one click, you'll automatically see these settings, okay? All right, so let's look at what these new settings look like. Here's the standard settings of the Bollinger Bands, and once we apply the altered proprietary settings, here's what they look like. Kind of more flowing, more like a river, right? Well, we're going to use this because this is going to help us with our entries. All right, so let's go over the entry rules. And remember, this is being recorded, so if you don't write these all down and remember them, don't worry, you can get the recording and watch this over and over again at your own leisure. All right, step number 1. Obviously, we want to plot the proprietary Bollinger Band setting on our chart. Remember, it's simple using our platform because it's one click away. Let's look at this older chart of Tesla, just for educational purposes. All right, the chart has taken off. It's starting to go higher. On our platform, you may say to yourself, oh, this is overbought. You know, all of the indicators are tremendously overbought. But what we want to do is click on Strategy 3A in our upper green Strategy tab with all of our methods and techniques. And in the drop-down menu, click on Indicator. Remember, it's already pre-formatted. You don't have to edit anything, and you see the proprietary Bollinger Band setting there, okay? All right, now we go to step 2. We want to look for and identify 5 consecutive price bars that close either on or above the highest Bollinger Band. So if we look at that chart again, here's the highest Bollinger Band right here, okay? So what we're looking for is 5 bars that close either on that high Bollinger Band or above. And if we do a little countdown here, we see that we have 1, 2, 3, 4, 5. So this meets the requirement of rule number 2. Now we go to step 3. We want to enter to buy when price trades, and you see that I underline trades. 1 tick if you're trading the stock, 1 pip if you're trading currency pairs, but 1 unit of measurement above bar number 5. Now remember, a lot of students have trouble with this. This is where they make a mistake. They say, oh, well, Steve, it didn't close there above bar number 5. Remember, all it has to do is trade 1 tick above bar number 5. So we see here are 5 bars, and here's the high of bar number 5, all right? The high of the extreme range. We want it to trade right there, 1 tick above that. Now, if we follow it, well, we see that it didn't trade there on the next bar. This, once again, is a common mistake students make. They say, well, Steve, it didn't trade there, so I assumed that the trade was negated and it's not valid anymore. No, as long as we are still above the highest Bollinger Band, we can still wait to buy once it trades 1 tick above bar number 5. And now on the next bar, it did. So we waited a couple of days, but we traded there. In this case, we closed above, but it wouldn't matter if we closed above or we closed below. All that matters is that we trade 1 tick above. That's our entry point. And look what happened. You could have potentially captured an extra 115 points. Remember, this is designed to capture these strong trends because it's used to identify that there's more room left in the move. Now let's look at the entry rules if you'd like to go short or want to use this as a sell. It's the same thing, we're just turning them upside down. All right, plot the proprietary Bollinger Band setting on your chart. Remember, you have the rules, you know, you go down to a fraction, regardless of what platform you have, it should go to 0.382. On our platform, it's relatively easy. For example, looking at this older chart of Roku, it's been going lower, but you would say to yourself, hey, Steve, this is a perfect reversal. We opened lower and closed higher. And that chat room I went to says that you've got to buy this. It made a new low and we closed towards the top of its range. It's a good buy signal, right? Well, what is strategy 3A saying? On our platform, we find and locate strategy 3A. We, in the drop-down menu, click on indicator. It's already pre-formatted. Nothing you have to edit. And we're below the lowest Bollinger Band. So this is not a good sign because it's telling us that, well, the trend is down. It may want to go lower. Let's apply step number 2. We want to identify 5 consecutive price bars that close either on or below the lowest Bollinger Band. All right, so here's the lowest Bollinger Band right here. Now we want to identify 5 closes. It doesn't have to be, you know, in the realm of the Bollinger Bands. It has to be below, on or below the lowest Bollinger Band. So we count 1, 2, 3, 4, 5. All right, so now we have step number 2 fulfilled. Let's go on to step 3. We're going to sell, not at the market. This is once again where students say, hey, Steve, you know, we have 5 closes below and I sold at the market and went straight up. This is where you have to study and paper trade first. We're going to sell only when price trades 1 tick below bar number 5. So it has to trade, doesn't have to close below, but it has to trade 1 tick below bar number 5 right here. So if you had sold at the market, that's not an adequate entry point. It has to trade below bar number 5. All right, so we waited 2, 3 bars before it actually did trade there. It didn't close below, closed actually higher, but that's okay. We got short, and look what happened. You could have potentially captured 45 points. Now, a lot of students say, yes, Steve, what happens when the trend reverses? Okay, well, when the trend reverses, as it did right here, well, then we just change with the trend. Now, what do we have? We have a total of 1, 2, 3, 4, 5 closes back above. Here's bar number 5, where we're going to buy again. And then we simply enter, and you could have potentially captured another 25 points. Now, in the course, we teach you all the different ways in which to exit. We teach you different ways in which to place your stop. So, you know, right now, I'm just teaching you the entry rules, all right? All the exits and everything is included within the course. All right, so now that you have the basic format, the rules, the entry rules to strategy 3A, let's look at some examples that happened in the last couple of months. Here's an example in Marvel, all right? Looking at this, we say, well, Steve, there's no volatility at all. You know, it's just kind of going sideways, and I've always been told, don't get involved with markets that are just basically treading water. And if we apply the proprietary Bollinger Band setting, yeah, there's no opportunities here. We have a couple of closes above, back down below, 1 above, back down below. So not much opportunity here. But then look what happens later on. That's when volatility starts to click in and we start to head higher. All right, we do our countdown. 1, 2, 3, 4. We have 5 closes on or above the highest Bollinger Band. All right, so we're getting close to a buy setup. So what we want to do is buy if it trades above here. So let's see what happened. Well, the very next bar, it did trade and it closed above. So you're long. That's your entry right there. And look what happened. In less than a week, you could have potentially captured 20 points. And you see how the volatility clicked in and all of a sudden there was a gap up, probably off some news or some announcement, right? Well, it's funny because we knew to go long prior to that announcement. It wasn't like this is based on any fundamental news. So how did we know to go long? Because what my mentors taught me is the same thing that's incorporated into this method. The market tells you just about everything you need to know. The only trouble is we're never trained to listen to the source, what's right in front of us. We're always looking at some guy on TV or listening to some earnings report. Why not learn to listen to what the market's telling us? It's a lot simpler and a lot easier to detect. All right, let's look at this example in TMUS, T-Mobile. All right, not much information here. In fact, it's kind of going up, down, up, down. We don't really have any idea what this stock is doing. But if we apply a proprietary Bollinger Band setting, we see, well, we're below. We go back within the realm of the Bollinger Bands, and now we're back below again. And in fact, we have 1, 2, 3, 4, 5 closes on or below. So this sets up for a valid sell signal. But we can only go short if we trade below here. Look what happened on the very next bar. It traded there. You could have gotten short, and that's your entry point. 15 points in the next week. Once again, a gap down based on some news or some event that happened. Let's look at Charter, okay? We have 1, 2, 3, 4, 5 closes above. Here's our entry point. Now, this is a good way to understand that it doesn't have to always happen on the next bar, because look what happened. We waited one bar, and then the next bar is where we entered, okay? So it doesn't have to always be on the very next bar. As long as price doesn't come all the way back down and close below the highest Bollinger Band, it's still valid. Look what happened. 35 more points to the upside you could have captured coming into the end of last month. Here's an example in Biogen, BIIB. 5 closes below, 1, 2, 3, 4, 5. Once again, a lot of students said, but yeah, Steve, it opened higher. It opened within and was touching the Bollinger Bands, and this one was touching the Bollinger Band. That's okay. Remember, the rules state that we just want to have 5 consecutive closes below. It doesn't matter if they're touching. The close must be on or below the lowest Bollinger Band. And this one is, here's bar number 5, so here's where we'll go short. We waited one bar one day, but on the second one, we could have entered. And remember, how you enter is up to you. We're just an educational company that provides you with these high probability strategies. If you want to trade stock options, if you'd like to buy puts or some type of spread strategy with a bias to the downside, or if you want to actually go short the stock, it's entirely up to you. How you enter is your choice. But what we're doing is teaching you these high probability setups. And you could have, once again, potentially captured 15 points to the downside. Another way to apply this, what a lot of our students like to do, is they don't like to go short. And we understand, not everyone likes to go short. So you could use this as an exit tool. Let's say you're along this stock and you didn't feel comfortable. It's been heading lower, but you don't know where to get out. If you want to protect your profit, you could use strategy 3A as an exit tool. All right, here's a nice example in SNPS. We have a bar closing right on the highest Bollinger Band, but that still counts as bar 1, 2, 3, 4, 5. Here's your entry point. It didn't happen the next day, okay, but we're still waiting. You can have an order in there, or you could be watching on a daily basis. And then the next day it did. So this is once again where a lot of students say, well, Steve, so the trade's no good anymore, right? Well, remember, it's up to you if you want to take the trade, but it's still a valid setup. As long as the next bar or whatever bar doesn't close below this high Bollinger Band, it's still valid. So look what happened. We're getting even lower, but we're still not closing below. And all of a sudden we gapped up, and there's your entry. Okay? So you could have used this as a valid entry even though you waited 1, 2, 3, 4 days, but that would have been a wise idea because in 2 days you could have potentially captured 50 more points. Remember, this is designed to capture those quick volatile moves in either direction. All right, let's look at Qualcomm. obviously it's been headed lower, right? Okay, and it's been below the lowest Bollinger Band here. And a lot of students say, but what happens when the trend changes and it goes back the other way? Well, once again, we just go with it. For example, we do the countdown right here, and we see that we have 5 closes below, 1, 2, 3, 4, 5. Here's our entry point. And within the next month, you could have potentially captured 16 points. Now remember, we teach you different exit points in the course. So I'm not, this is not something that's kind of left up in the air. Or you can use your own exit plan or a discretionary, whatever you like. But now here, once the trend changed and we start to close above, well, now we have 1, 2, 3, 4, 5 closes above. Here's bar number 5, and here you could have entered and potentially captured 9 points. So that's 25 points you could have potentially captured, not by listening to news or not by following what some guy says in a chat room, simply by listening to the market right in front of you. It's that simple. All right, let's look at some other markets and some other time frames, because remember, you can apply this to virtually any market or time frame. Here's a 4-hour chart of the dollar-yen. All right, just because we change markets, just because we change time frames, doesn't mean that the rules change. Everything stays the exact same. So we apply the same proprietary Bollinger Band setting. We have 1, 2, 3, 4, 5 closes below. Here's bar number 5. So we're going to go short the dollar-yen on a 4-hour time frame if it trades 1 pip below. It doesn't have to close below, just as long as it trades 1 pip below. So we waited 1 4-hour bar chart, and then on the next 4-hour, that's where we got short. We entered right there, and in the next week, we could have potentially captured over 600 pips. So for all you currency pair traders, this is a great, great method because we know how volatile the currency markets can be. Now that was a 4-hour chart of the dollar-yen. Let's look at a weekly chart of the spiders. Okay, this is the ETF that represents the S&P 500 index. All right, so if we look at this, we say, okay, here's the proprietary Bollinger Band setting. We have 1 bar below, but now it closes within the realm of the Bollinger Bands. But now here we have a close above, 2, 3, 4, 5 closes above. So here's our entry to go long the spiders. Now this is a weekly chart. Now we know that not everyone trades weekly spiders or the ETFs, okay? It's expensive stock. That's okay. You could use this as a market direction tool. Here's what a lot of our students do. They say, well, listen, if the spiders, which represent the S&P 500, is flashing a buy signal, doesn't that stand to reason that the market's going to have a nice rally if it's activated? So then you can use this as a market directional tool and then buy whatever you like if the market is going to be headed higher. So we have on a weekly time frame, we're waiting for the next week, and you would have entered right there on the next week. Even though it closed lower, there's your entry. This is telling you that the spiders want to go higher on a weekly time frame. And look what happened coming into the end of July. That was 40 points on the spiders. Now that represented roughly 1,500 Dow Jones Industrial points. So once again, a lot of our students like to use this on ETFs to tell them what they think the market's going to be doing. Let's look at a weekly chart of Peloton. Now we all know that this company was riding high during the pandemic, but then after that in 2021, it started to slide tremendously. Let's say you had some good money, you made some really good profits going long this stock, but now it's starting to fall out of bed and you don't know how or where to exit. This is where a lot of our students like to use this as an exiting tool. They don't like to go short that much, but they like to use this to know when to get out. So looking at a weekly chart of Peloton, we see that we had 1 week close below here, another week, second week, third, fourth, fifth week, and here would have been your entry. Now you would have gotten out, let's say you're using this to get out of your long stock, and look what happened. It closed much higher. And you would have said to yourself, here's what a lot of students say. They say, hey, Steve, I exited, and now it's higher. Well, that's okay, because remember, this is not designed for 1 bar. This would have been a great place to exit. This would have been in October of 2021, because look what happened after that, okay? You would have saved yourself 80 points had you held on to that stock. This is what so many investors do. They hold and wish and pray that it's going to turn around, and then they just turn into a long-term investor, right? So this is a great tool if you don't like to go short to help you decide when and where to exit a stock or a currency pair or a commodity. Makes no difference. Let's look at ODFL. Let's go through the entire process again, once again, okay? So we have a nice volatile move here, but once again, we open higher and then close lower. So let's say that guy on TV says this is overbought. You're looking at a reversal. It's time to get out, time to actually go short. So you could have said to yourself, well, I'm going to sell. I'm going to go short, or I'm going to get out of my long position. but what is the market telling you? Remember, 46 years ago, I used to listen to these same guys on TV tell me what they think the market's going to do. And I really couldn't make any money following someone or something else's advice. It wasn't until I started to just listen to the chart in front of me that I started to become a consistent trader. So let's apply. Let me see, for one day it looks pretty good, but let's apply the Bollinger Bands. Now the Bollinger Bands are above the highest ones. Or I should say price is above the highest one. And if we do our countdown, we see that we have one closing on the highest Bollinger Band, 2, 3, 4, 5 closes above. So this is actually setting up for a buying opportunity, where that guy on TV told me that we were going much lower because we reversed. I'm getting ready to go long because I'm listening to what the market is telling me. But I can only go long if we trade one tick above bar number 5 right here. And let's look what happened. On the very next bar, we open lower, we touch the Bollinger Bands. That's okay, but as long as we don't close there, it's still valid, and we traded above. So you could have gone long where everyone else was saying, well, that guy on TV said to go short, and potentially captured 85 points. So this is how simple it is to be in sync with these volatile moves, okay? Just by applying these simple entry rules, you'll be able to trade any market or any direction, any time frame using this simple strategy. Okay, so let's recap. Remember, strategy 3A is a continuation strategy. We're not looking to buy at the low or sell at the top. We're looking for an already established move, and then the strategy determines if there's more room left in that move, and by applying a little structure, it enables us to jump on board and potentially capture some more points. It does this by applying a unique Bollinger Band setting. Now remember, that Bollinger Band setting is usually reserved for the students who have purchased this strategy. I just gave them to you, those special settings. Remember, they are 0.382 for the setting for the bar above the moving average in the Bollinger Bands, and negative 0.382 for the lower band. Now it's designed to trade these quick, powerful trends, as you just saw. You can apply it to any market, any time frame, and any direction. But please, as I've stated throughout the presentation, learn this strategy like the back of your hand first. Please paper trade. Learn the rules, what we've gone over, because so many students lose right off the bat. And then when I discussed what they did with them, I realized that they implemented the rules entirely incorrect. And so that's why they're losing money. You have to apply the structure correctly. Our edge here is consistency. I'm not going to promise you that every trade is a winner, but many times with a consistent method, you're able to recoup those losses on the very next setup. That's what a consistent method is, a 2 steps forward, 1 step back approach. Now ask yourself, 2023 is half over, more than half over. We're actually going to be coming into September, if you can believe it, in just a couple of weeks. Do you think this strategy can help your trading for the remainder of the year? And I know most traders start out the beginning of the year in January with all these hopes and dreams. They make themselves all these promises where they want to be. By August, I want to be making so much a month. I want to do so well, and I can maybe use that extra money to, do that addition on my house, or maybe go on that trip I've been looking to share with my significant other. And most likely, the majority of traders never reach those goals by this month. In fact, they're probably doing worse. That's okay. I was there too. I know exactly what that's like. Finish your half of the year 2023 strong. Take advantage of what we're about to offer, because we have a great offer for all of you for attending today for our Toasted Traders presentation and for our association with Trade Thirsty. We're going to offer you our Secrets of a Stock Exchange video seminar. Now, some years ago, I was invited to be the head speaker at a conference in Colorado, and I spoke for roughly 3 hours. And I talked about many more trading techniques. I talked about high probability trading edges. And I also talked about which indicators to use and which ones not to use, and the #1 chart pattern that you should be applying in all of your trading. So this was a great 3-hour-long presentation, and they recorded it for us. So that's what our Secrets of a Stock Exchange Specialist video seminar is. It's a recording of this 3-hour plus actually presentation I gave years ago, and it's just jam-packed with information, things that I've accumulated in my 46 years of trading. But here's one of the best things about these 3 hours of trading techniques. Included in the Secrets of a Stock Exchange Specialist seminar are the complete rules to strategy #1. Now, this is an entirely different strategy than strategy 3A entry rules I shared with you. It's based on entirely different parameters, and it's a pullback method. Now, if you're not familiar with a pullback method, it's the exact opposite of a continuation method, what strategy 3A is. In other words, we're looking to buy at lower levels and looking to sell at higher levels. So let me share with you what I mean here. Here's an example in Meta, META. Okay, this was just a few weeks ago. Now, a pullback strategy identifies the difference between a simple downtrend and a buying opportunity, where most people would have thought, well, listen, this is a double top here. It's time to exit on this downtrend. Strategy 1, with the rules that you'll be learning in this seminar, actually generated 2 buy signals just about 3 weeks ago on the 21st and the 24th. And look what happened. In the next week, the stock just took off. In fact, it gapped up on this day based on some news. Once again, why? Because these strategies and methods are based on market behavior. And when they're based on market behavior, oftentimes they can generate setups and signals well before the announcement comes out. Here's another example. In the euro dollar for the currency pair traders, here's a 4-hour chart of the euro dollar. Okay, most traders would say, hey, Steve, this is an uptrend. You say to trade with a trend, right? Well, it's going higher, so I want to be a buyer of this. Well, if you apply strategy 1 rules, which you'll learn in the course, 2 sell signals were generated here on the 26th, telling you to actually sell this well before it fell out of bed. And then lastly, here's an example in the Dow Jones Industrial Average. Once again, you can apply this to indices. You can apply it to ETFs. There was a pullback that happened in the beginning to mid-July period, just about a month ago, where most traders thought we topped out and we were headed lower. Strategy number 1 generated not 1, but 3 buy signals right in a row. This is what we call a cluster. It's a very strong sign when you have these signals right next to each other. And we all saw that the market took off coming into the end of July, okay? So this was basically a really nice run in the Dow, roughly about 2,000 Dow Jones points in just 2 weeks, based on what you could be learning with strategy number 1. So you're going to get the complete rules to strategy number 1 in the 3-hour Secrets of a Stock Exchange Specialist video seminar. With strategy 3A, which we just learned today, I just gave you the entry rules. But in this video seminar, you'll get the entry rules, you'll get the exit rules, plus you'll get the stop placement rules and how to trade it aggressively as well as conservatively, okay? So this is 3 hours jam-packed with information, once again, that I've accumulated in my 46 years of trading. Now, on the website at Proprietary Strategies, my sister site, they advertise the Secrets of a Stock Exchange Specialist video seminar for close to $1,000. That's how much information is included within this. But because of our Toasted Traders presentation today and our association with Trade Thirsty, we have a great discount, but it's for a limited time. So I don't want you to think that this is going to be lasting for months. We're going to discount that $9.97 all the way down to $37. But I must stress, this is for a limited time only. I think probably less than a week, because that is a tremendous discount from nearly $1,000 down to $37. I can almost guarantee that most of you spent more than that in commission this past week. So think of that. You'll be getting over 46 years of education, of experience, of trading techniques and methods that you really won't find anywhere else. These are things I've accumulated from my years on the trading floor and that you'll find in this Secrets of a Stock Exchange Specialist video seminar. $37. You owe it to yourself to take your trading to the next level. Remember, finish the year out strong. $37, you probably can't even go out to breakfast for less than $50 these days. And I know dinner, don't even mention that. So $37, you're getting this, and it's yours to keep. This is not something that expires in a couple of weeks or disintegrates. It's a video that you can watch at your leisure whenever you like, and you can watch it on the weekends. You can study it, and it's a great, great way to take your trading to the next level. Okay, here's how to take advantage of this. Contact my sister site, Proprietary Strategies. They're in charge of all of our marketing and discount. I'm in charge of all the education and teaching in our companies. You can email them at trading@proprietarystrategies.com or call them directly. I would say that's probably your best bet. You'll get everything sent to you most likely today. You can give them a call at area code 310-598-6677. They have trading consultants manning the phones right now. Now, that link you see at the very bottom is the link that will take you to the info page as well as the sign up page if you'd like to sign up online. It's not a live link. I don't know if Trade Thirsty is going to post that on their site or on the chat box or anything, but you can copy and paste that. But once again, The easiest and simplest way is to just simply call the good people at Proprietary Strategies. They're not going to try and upsell you into a higher, more expensive strategy or technique. If you're just interested, even in finding just out more information, they would be happy to work with you and just give them a call. Okay, so there's absolutely no obligation at 310-598-6677. Now, I promised you I would answer your questions at the very end, so I'll just open up the question and answer box if that's okay. Let's see, it says, does it matter the time frame you're looking at for the 5 bars? No, it makes absolutely no difference. As I shared with you, if you're looking at a 5-minute time frame or if you're looking at a monthly time frame, it makes absolutely no difference, okay? So it can be applied to any market and any time frame. Do you use the default settings for your Bollinger Bands, 20-period simple moving average? Yes, that's a good question. The Bollinger Band setting, the only thing we're changing are the upper and lower deviation, okay, of the upper and lower bars. We're not changing the 20-period simple moving average. So I believe this person was asking, do we change that? No, you keep that the same. So the simple moving average, or the middle Bollinger Band, is the 20-period simple moving average. You're going to keep that the exact same. We're just changing the upper and lower deviation to plus 0.382 and negative 0.382. Now, you should be able to do this on whatever platform you're using. Just go into the edit box, type in edit, and change it to that. But remember, that's the beauty of having our platform. Everything is pre-formatted. It's one click away. There's nothing you have to rework and work with that. So it's a great question. You can ask Proprietary Strategies if you're interested in our platform, okay? Someone saying, my goal every year is not to lose. I know, and so many traders will make goals like that, and they still come up short. I mean, so don't feel, like depressed or disappointed, and you feel like everyone else is doing well, and I'm not. Roughly, it's been estimated that 85% of all traders fail. And when we say fail, we don't mean that, okay, they had a series of losses. No, it means that they fail. They lose all their money that they set aside for trading. So don't feel as if you're the only one and everyone else is doing fantastic. The majority of all traders fail. So as an educational company, our goal is simply to get you back on track into that remaining 15%. We're able to at least break even or consistently make profits. That's our goal as an educational company, okay? And our goal is not to tell you that, hey, we've picked the market 5 times out of the last 6 years, or we tell you what the best stock to buy is and it shot up. That's not, that's not what an educator does. An educator teaches you so that you can decide those things on your own. And that's our goal at Specialist Trading, okay? Someone's asking, hey, Steve, why exactly 5 bars above the Bollinger Band and when to exit? Well, you can experiment. Remember, we encourage people to experiment with this. When my mentors taught me this method some 4 decades ago, I experimented with this. I looked at 3 bars. I looked at 10 bars above or below. And guess what? 5 bars seems to be a nice round number that seems to work the best. It seems to work well. It fits in with a nice weekly time frame. But you don't have to. If you feel more comfortable and you say, hey, I've found out through my work, through the market I trade or time frame I trade, that 3 bars works great, then great. What we're trying to do is just instill in you this concept that if we're above those highest Bollinger Bands, you don't want to look at that as a shorting opportunity. You're looking at that the market may be telling you it's going higher and to jump on board, all right? Regardless of what some indicator says it's overbought, oversold, the market may be telling you, I know, I want to keep going higher. So that's what we're more interested in. Now, the exit rules, I can't give to you right now. That would be giving away the farm. It would be as if we went into a restaurant and I gave you a really nice appetizer and then you say, well, can I get the entree for free too? Okay, that wouldn't be fair to all the students who have purchased this method around the world. But I did give you a good portion, and now you know how to apply it. And you can use your own exit rules, and if you decide to become a student of this course, you can use the exit rules as well. Now, in the 3-hour video seminar, for only $37, there are a number of exiting techniques we teach in that. So if you decide to purchase that, you can apply those same techniques to this as well. There's lots of great ways to figure out, okay? Do you have a scanner to find the trades? That's a great question. We do have a scanner, but that's on our platform. So once again, that would be a question contacting Proprietary Strategies if you'd like to also include the platform. They're very flexible. I can't quote what the prices are because once again, that's their department. I'm just in the teaching and education department, but they're very flexible. If you should decide to become a member of the Secrets course, the 3-hour video course, I'm sure they could work with you and give you a good deal on the platform too. And with the platform, let me just say right off the bat, you're not going to just get strategy 3A and that's it. You'll get strategy 1 as well. And you'll be able to, with one-click access, click on the signals for that. You'll get the up and down arrows where all these signals are generated, okay? You'll get exit levels, automatic exit levels on the platform. So it's a great, great offer. But once again, I'm not trying to sell you the platform. I'm just telling you what's offered there. Contact Proprietary Strategies. They'd be happy to answer any questions you may have. But there is a scanner for all these strategies and all these techniques on the platform. Yes, you can scan for them for intraday, also for weekly, for daily setup. So it's a really great, great way to learn. And once again, we feel take your trading to the next level. All right. Good questions. Any more? Let me see if we have any more questions. As we go down, I think that's about it. Now, remember, we gave you the entry rules to strategy 3A. So you know exactly what they are. Please paper trade and practice them so that you know them like the back of your hand. Don't just jump in on Monday morning and say, I've got this, I know what to do. Because most likely you'll lose. I've been sharing this technique with traders for a long time, and that's usually why they're unsuccessful, because they're applying it incorrectly. They're not listening to the rules and knowing the entry rules, okay? So please, try this like the back of your hands, practice it, and then when you feel comfortable, then jump in using some small size, all right? Now, the Secrets of a Stock Exchange Specialist video seminar, 3 hours jam-packed of information I've accumulated in my 46 years of trading, is offered at a deep, deep discount. It's only $37. I can't believe it's discounted that low, but that's what they've wanted to do. They've really discounted it down to that lower of a level. So that's for a limited time only. I think it's, please, someone was asking the price screen again. Oh, shit, let me show you this real quickly. There it is right there. And all this information is included as well. So that's for a limited time only. If you're really interested, contact Proprietary Strategies. They're in charge of taking your order over the phone or giving you more information if you just like a quote for that or the platform. And they can work with you, but just don't sit on this too long because, like I said, I believe most assuredly by this time next week, it'll go back to close to $1,000. Now, think of it. You're getting over 4 decades of information. It's taken me that long to accumulate. You're getting it in a 3-hour video that's yours for good, and you can use it whenever you like, okay? So let me just go back to the phone number. Some people are asking for the phone number again. There it is. Contact Proprietary Strategies. Give them a quick call at area code 310. Whoops, let me just go real quickly. I'm sorry. I missed the slide there. At area code 310-598-6677. Okay? I think we're just about out of time. I don't want to take any more of the next speaker's time. So at this point, I just want to say thank you so much. Thank you to Trade Thirsty for giving me the opportunity to speak. And thanks to Jeanette for giving me the time here. And I give it back to you and any questions that you may have. Okay? Thank you.
Thank you so much, Stephen. We appreciate you coming out here this Saturday and spending your free time, your Saturday morning with us. I mean, that's to me, it always makes me feel very humbled to have guys like you who will take time to come and speak to our readers and our traders. And so I've got Stephen's offer up on the screen for those of you. I also posted it in the chat box for you. It's protraderstrategies.com/secrets offer. And he's been telling you all that there's the phone number as well. If you want to call in and talk to them, that certainly is also another way to get involved. And thank you, Stephen. You have a great afternoon. Happy Saturday.
Thank you, and to all your students and all to your people as well. Thank you so much.
Okay, bye. All right, so we're going to keep moving along. Looks like we've had a lot more people join, so I'm going to go back through real quick what our house rules are. Y'all just remember to be gracious and thankful and nice to all of our speakers who come out today. They're giving up an hour of their Saturday to come spend it with us, and we don't take it lightly. So you guys just be sweet. At the top of every hour, we're going to be doing a quiz where we're giving away a swag bag or cash or both. It just depends on what hour we're in. And right now, the top of this hour is going to be a swag bag from Trade Thirsty. Comes with a t-shirt, ball cap, some stuff from a couple of brokerage companies, pins. We've got a really nice swag bag we put together for you here. And so we're going to do that with the next question. So let's go ahead and put our fingers on the keyboard. If you guys want to go ahead and put a X in the chat box for me. X in the chat box. I have a friend who's listening in right now to Trade Thirsty's Toasted Traders for the first time. And he was like, it's not Twitter anymore, it's X. And I thought, can we just not call it that? Can we keep calling it Twitter because it's so fun? Do we have to call it X? Yes, we can call it X. Okay, I'll try to start doing that. It's just like the fake book, right? I can't call it the fake book. I can't call it Meta. I have to call it Facebook. All right, so here we go. First person to answer the question correctly will win a swag bag from us here at Trade Thirsty. Who played Mork on Mork and Mindy? All right, James Player, you got it in there first. Everybody knows it. Look, y'all wrote the whole thing out. The answer was Robin Williams. Now, I should have put this little disclaimer. We're all about our disclaimers, right? I should have put the disclaimer out that I can't ship outside of the United States. So if you're outside of the United States, we'll have to work a little side deal out. James, if you'll just put your physical address in the chat box between you and me, then I'll make sure that you get your swag bag. Now we are actually running early today. This is, I think, probably a first for me personally in my entire life, and for us here at Toasted Traders to be early. I'm called Notorious LATE because I'm always late. Here we go though. We've got my good friend Serge Berger, and I reached out to him and said, Serge, I need you, buddy. I need you. Are you free? Can you come in a couple minutes early? Because we're actually not on time, but early. And he said, heck yeah. So he jumped in, and I'm going to make him the presenter. He's going to be talking about his #1 cash flow trade that's hitting around 70% right now. And let me make him the presenter.
Muted.
Let me mute Primo. Let's see. Okay. Sergio. There you go. All right. Thank you, James, for putting your address in the chat box. I have it. Let's give Serge just a second to get his stuff together. Hey, you guys! Now that I see that my buddy James is in the great state of Texas, it's right around the corner from me. Why don't y'all pop in and let me hear from you? Where are you dialed in from right now? We got some killer testimonials from the last time we did this, and I just want to thank all of you who take a minute to go and send me a special email letting me know who you liked, who you didn't, and what was your favorite part. Oh, I forgot to do the favorite part. Before we give Serge the mic, let's rank Stephen Primo. I almost forgot my most important thing. 1 to 10 in the chat box. 1 to 10 in the chat box, Stephen Primo. 1 being the worst, 10 being he rocked it. Put that in the chat box for me and let me know. This always helps me figure out who we're going to bring back next.
Morning, guys.
Hey, you there?
Hey, I'm here. I had to pull out I got new glasses yesterday. So I see everything about 4 times right now.
Do you have headaches? Are you falling down?
No, everything is good. When I look at the chart, down is up and up is down. No, I'm just kidding. No, but
Look,
no,
when
it's
I
like
glasses, it takes me a minute to adjust.
Yeah, it takes a minute, and it's interesting how that works.
Okay. Mike, I do not have a URL to the schedule, but I'll pop it in there for you. I'll give you the data. All right, Serge. I think I gave you all the power, didn't I? See your screen. I can hear you. Can everybody hear him okay?
Yeah, I think audio seems to be good from what I saw before.
You got 6 extra minutes, buddy. Have at it. Happy Saturday.
Yeah, awesome. Happy Saturday. Yeah, what I thought, since we're running a little bit early, is we just take a quick look at the market before we specifically go into a strategy that you guys can start using on Monday. What I'd like to do is if you guys have some ticker symbols you want to give me, just shoot them out, and I'll have a look at them and kind of tell you what we think about it. I'll start off with this though. Just broadly speaking, if we look at where we are in the economic cycle, I would imagine people have kind of picked up on this, but things have really been slowing down. So at this point, we think that the likelihood of default risks and things like that is really through the roof. Very much more near term though, what we'll quickly look at here is we can look at, for example, the S&P 500. And the S&P 500 has essentially on a weekly basis now, and this is the weekly chart, I'm using the SPY here as a reference point. We've had an outside week 2 weeks ago. So you can see that sort of outside candle right there. That's this engulfing candle, this big red one. That was 2 weeks ago. This week that just ended, or the trading week that just ended yesterday, we basically had another failed rally. On the daily chart, this has become apparent a little while ago. We started initiating more shorts, I think about a week and a half ago or something like that. And you can see we had an outside reversal day on the 27th of July, I think that was a Thursday. Yeah. Can you guys all see that? And then we had a series of just a couple of sort of blah days where nothing really happened. The market was undecided, couldn't really get anywhere. And then we had a confirmation down day. That's that day right there. These are massive arrows I got here. Holy cow. On the 2nd of August. So right as we kicked off the month of August, a big confirmation day, which confirmed the outside reversal day of Thursday, the 27th of July. Then we had another selling day on the 4th of July, 4th of August, apologies, which confirmed that day. And of course,